Hello and welcome to today's edition of The Exchange, brought to you by the New York Stock Exchange. I'm live on the floor with John Kerschner. He's the head of U.S. securitized products as well as portfolio manager at Janus Henderson. Thank you so much for being here, John. I actually saw you on TV earlier.
Doing the rounds this week.
Yeah, there's a lot of news out there. What are your thoughts? What are you kind of seeing right now in the fixed income markets?
Yeah, it's been a difficult couple of years in fixed income. Last year, a lot of fixed income funds down double digits. This year, I think a lot of people thought it would be a lot better. And notwithstanding what's happened in the last couple of weeks where bonds actually have rallied, to bring most fixed income funds slightly positive on the year, it's still been tough because there has been so much volatility, particularly with the uncertainty with the Fed. And it's really why we launched 3 years ago JAAA, our AAA CLO ETF, to help investors in times like this.
Yeah, and we've talked about, even today, right, the unbelievable growth of JAAA.
Yes.
But where did it kind of all start from? Where did the idea for this CLO ETF come from?
Yeah, it's a great question. We actually launched an agency mortgage-backed security actively managed ETF 5 years ago. That's almost $3 billion now. And based on the strength and growth of that, we said, well, what other market out there is large, but there's no liquid, scalable vehicle out there for individual investors? And the CLO market just came right to mind, right? It's $1 trillion market, very liquid. It gives investors the opportunity to invest in high quality income, currently about 7%. AAA rated, and maybe best of all, really no interest rate risk. So that volatility is much less than most fixed income funds. We think that makes a lot of sense.
Let's stay on CLOs for a bit,
Yes.
right? Because I think the natural question then becomes, where does this sort of belong in a portfolio?
Yeah, well, what we hear from a lot of people this year is, I don't really know what's the Fed going to do, what the economy is going to do, and T-bills are giving me 5%, or I can get a CD for 5%. Why wouldn't I do that? And what we tell people, you know why? Because banks take your money for their CDs, pay you 5%, and then they go buy AAA CLOs and earn 7%. And they take 200 basis points, put that in their pocket. We charge you 22 basis points to get the same thing. JAAA is up 7.5%. If you had a CD, you would have 5%. If you bought a T-bill ETF this year, you'd be up about 4.5%. So if you can weather that little bit more volatility that comes with investing in AAA CLOs. Still very sleep safe at night. That's difficult to say. But if you can weather that little bit more volatility, I think it really makes a lot of sense for people who have too much cash in their portfolios.
So we're coming into the end of the year. Do you look at this market? How do you think about today's market? Is this the time where people should be entering the CLO market?
Yes, I wouldn't be here if we didn't think so. But principally because we believe the economy is doing pretty well. We should have something around 1.5–2% growth in the fourth quarter after 5.2% growth in last quarter, the third quarter. We think the Fed's going to be higher for longer, meaning they're not going to cut rates, at least not a lot, anytime soon. So you're going to be able to clip that income again with high credit quality, no interest rate volatility. I think most people want that in their portfolio, and it's still a great time to have it.
So for investors, advisors, they're listening in, they want to learn more about JAAA. Where do they go?
Go to our website, janushenderson.com. We have all sorts of information, including the fact sheet. Should be very easy for people to get information.
Perfect, easy to remember. And as a reminder, if you caught this episode on replay, but you're looking for additional thought leadership, you want to learn more about ETFs, you can find it all on our website, etfcentral.com. All brought to you by none other than the New York Stock Exchange, the home of ETFs.